Hey everyone, welcome to The Deep Dive, your go-to source for unpacking the most complex stories in tech and finance, one layer at a time. Today, we're zooming in on one of the most talked about names in the semiconductor world, Advanced Micro Devices, or AMD. And if you've been following the AI race even casually, you know the stakes are enormous right now. AMD has been busy, not just launching new chips, but making bold moves that signal they're not just trying to catch up to Nvidia. They're trying to build a whole new lane of their own. So, what did their latest announcements reveal? And more importantly, what do the numbers tell us about how real this momentum is? Let's dive in. At AMD's Advancing AI event, the spotlight was on their next-gen accelerators, the Instinct MI350 and the flagship MI355X GPUs. Now, these aren't just tweaks. These chips are built on a 3-nanometer process and offer up to 288 gigabytes of HBM3E memory. Translation: smaller transistors, more performance, and way more memory speed. That's key for large AI workloads where speed and memory depth are everything. And AMD didn't stop there. They brought liquid-cooled and air-cooled options, giving data centers more flexibility, and made a headline-grabbing claim: on certain benchmarks, their chips may match or even outperform NVIDIA's Blackwell B200. Let me repeat that: outperform Blackwell. Of course, certain benchmarks is the caveat, but still, that's a statement. But the real attention grabber? Cost efficiency. AMD claims 40% more tokens per dollar versus Blackwell on those same workloads. That's massive for hyperscalers, where every microsecond and every penny counts. And this is where AMD starts looking less like a chip maker and more like a full-stack AI infrastructure provider. They've introduced new networking hardware, including the Pollara 400 NIC based on the Ultra Ethernet standard, up to 20% faster and 20x more scalable than InfiniBand, which is basically the current industry standard in high-performance computing. Then there's Vulcano, a 2026 networking chip promising 800 GB speeds. Why does this matter? Because training large AI models like GPT-style transformers requires thousands of GPUs. The bottleneck isn't just the chips, it's how fast they can communicate. Think of it like your GPUs are sports cars, but the highway between them is a country road, useless if it's clogged. AMD's betting big that better highways, better AI. They also rolled out UAL, or Ultra Accelerator Link, a direct competitor to NVIDIA's NVLink, but AMD's version, open standard. That's not just a tech decision, it's a strategic power play. Open ecosystems encourage partners, developers, and even competitors to engage. It's a clear jab at NVIDIA's more closed-off ecosystem. Oh, and surprise, AMD's building entire racks now. Their upcoming Helios architecture, launching in 2026, is a full AI rack system. CPUs, GPUs, networking, all AMD, integrated, optimized. That's a shift from component supplier to system architect, just like NVIDIA's NVL72 rack, but with a more modular, open approach. All right, let's pivot to the money, because tech alone doesn't move stock prices. Performance does. According to the source we're analyzing, AMD posted Q1 2025 revenue of $7.438 billion, up 36% year over year. Operating margin expanded to 24% and EPS surged 55%. That is serious operating leverage, and it's coming largely from two places: data center revenue, driven by their Instinct GPUs, and EPYC server CPUs, hit $3.7 billion, up 57% YOY. Desktop CPUs, the surprise comeback story, jumped a staggering 68% YOY thanks to the success of Zen 5-based chips like the Ryzen 7800X 3D. Even with gaming console chip sales down, the desktop segment pulled its weight, and then some. And what about stock performance? Well, the price rebounded recently, sitting at 120.59s as of June 11th, but the source notes that AMD had underperformed peers for much of the past year. That said, the momentum is returning, with AI and server wins driving sentiment. Let's not forget, AMD isn't operating in a vacuum. Nvidia still dominates the AI accelerator space, especially with its unmatched CUDA ecosystem, but AMD is catching up. Their ROCm platform is maturing, now even with Windows support and a developer hub. The moat is still deep, but AMD has a ladder. Intel, on the other hand, continues to battle in the server CPU arena. According to Q1 market share numbers, AMD held 27.2% unit share, but a much higher 39.4% revenue share. What does that mean? AMD's chips are being seen and sold as premium solutions. Their EPYC processors carry higher ASPs, and customers are paying for performance. Intel's response? Upcoming Diamond Rapid CPUs built on their new 18A process, aiming for a 2026 showdown with AMD's 6th gen EPYC. The source lays out two scenarios. If Intel executes well, we get a stable duopoly. If not, AMD keeps gaining and fast. Either way, AMD looks like a winner. So, what's the overall picture here? AMD is evolving fast. From chips to systems, from components to platforms, they're building an entire AI infrastructure strategy, not just a few fast processors. They've shown strong financial execution, a clear multi-year roadmap, and an expanding customer base including OpenAI, Microsoft, Meta, and others. But here's the question for you. As AMD moves from chip vendor to ecosystem builder, how does that shift impact their long-term position in the AI arms race? And even more interesting, with Nvidia, Intel, and AMD all laying out multi-year visions, what kind of pace of innovation should we expect in the next 3 to 5 years? We're not just watching companies launch products anymore. We're watching them launch entire futures. That's it for today's US Stock Insights. If this kind of unpacking is your jam, don't forget to follow the podcast. We'll keep breaking down the stories that matter with clarity, curiosity, and maybe just a little caffeine. Catch you next time.